at ES and do a quick midweek update as we get ready to trade Thursday, August 26th. On Thursday, we see the start of that meeting in Jackson Hole with all the world's economists meeting up and doing it virtually. Actually, not actually going to even be in Jackson Hole, or maybe they're going to be there and they're going to do like a Zoom call from inside the hotel there or something. I don't know. But at any rate, there was some hubbub about that, and one of the reasons why we kind of gapped up open this week was that the news came down that they decided to make that a virtual conference. So as everybody started getting the idea that maybe there was going to be a more dovish tone to the statement that comes out of that meeting this week. Now, the symposium starts tomorrow, but we don't get Powell's speech until Friday morning at 10 o'clock Eastern. So anyway, let's talk about some levels. We're starting off with a look at ES. ES had a lot of action here around this 44.92 level. This was a brand new all-time high that ES took it upon itself to make overnight into Monday's session. And then it was left unresolved with the S&P 500 until today. It was this move right here this morning around about 11:30 Eastern, where we blasted up through 44.92. And we came back down to it and tested it a couple of times. So now this is a really key level that we should keep an eye out for. It will be a clue as to whether we're going to continue to rally or we're going to start seeing some weakness. Because I think that if we see futures slip under this overnight tonight, maybe we're going to have a little gap down open tomorrow. But if we wake up in the morning and we see that ES is above 44.92, maybe we're going to take another stab higher and get ES to 4,500. Because as you can see, it only traded to 44.98 today. Equivalent level on the S&P 500 to that 44.92 is the 44.96 to 44.9625 handle or so. Our close today, a new all-time closing high at 44.9619, but not a close above 4,500. So this is another one of our little 80 handle rule failures. We traded up to 45.01 and change, but didn't close above 4,500. Remember when we were trading up to 44.80, initially we failed to close above it and we pulled back pretty deeply. We came up again, and we failed to close above it. We just kind of regrouped, but finally got the job done the next day. That was yesterday. We got our first close above 44.80 yesterday, and here we printed 4,500, but we did not close above it. So that is something of concern, but like I said, let's see where ES is in the morning, and if it's above that 92 level, maybe we're going to take a stab higher. A little higher than this 45.01, and maybe we'll try to stick the landing and close above 4,500 on Thursday so that we have something to really sink our teeth into ahead of Powell's speech on Friday. Anyway, so another thing to watch out for tomorrow that will give you a clue as to our strength or weakness is that each day this week, our initial balance low has turned out to be the low of the day. The initial balance period is the first hour of the trading day. So if the low that we make in the first hour sticks as the low for the day, that's a pretty good sign. Basically, if we get through to the European close and we haven't visited back to that low yet that has set in the first hour, then we're probably good to go for the day. That has been the pattern all week, so let's see if that sticks again tomorrow. If we are to continue higher, we're drifting up above 4,500. We go on usually to about 45.25 to 45.35. In the next chart, I'll show you once again what our end line target is, but that just gives you sort of a minor next target to look for once we rise up through this 45.01 and maybe once we pull ES above 4,500. If we come in weak tomorrow, if ES is above 44.92 and we open and we have a little bit of weakness in the morning, our first line of defense is going to be the low that we set today, Wednesday, and this low that was set here on Tuesday. Thanks a lot, Thinkorswim, for popping up this message. I'll try and just keep talking through it. So these two, daily lows that we've made here, both above 44.80. So basically, we just want to make sure and hold above 44.80. And if we break 44.80, just below that at 44.76 is the halfway back on our week so far. So as long as all this holds, we're going to reverse and we're going to go back up and take another stab at 4,500. If this stuff breaks, then maybe we're going to have a little bit deeper pullback, maybe down here and test the 10-day simple moving average. And if worst case scenario, maybe testing Monday's low and trying to reverse above that. Monday's low was 44.5029. That was the gap up open for the week. So this would just be a playthrough of the 80 handle rule, basically we would be saying this. Here we looked above 4,500 and failed. We couldn't hold on above 44.80, so we tested into the 44.60s, and that failed, so we tested into the 44.50s. If 44.50 fails, then we've got a little bit deeper move to go. We're going to go down here to the 20-day and down here to the halfway back on the month, which is 44.34 and change. So we take the high that we just made today, the low, the new low for August that we made last week, add those two together, divided by 2, and here is the center line on that halfway back point. So ultimately, that's where we would be looking to pull back to if things get a little bit deeper. And especially if we were to pull back tomorrow and then the market didn't like Bernanke. I keep wanting to call him Bernanke. Isn't that terrible? I keep saying that in my head today. It's Powell. Bernanke's like many moons ago. Anyway, if we were to pull back on Thursday and then if the market didn't like Powell's speech, maybe we would end up trading Friday all the way back down to here. So food for thought on all of that. I also want to point out that here is the rally that we've been on. Here was that new low we made last Thursday. 1, 2, 3, 4, 5 green days in a row. Back here in July, I'm pointing more to the left side of the chart here now. We had this slam down to a new July low. We finally bottomed out on July 19th, and we rallied for 1, 2, 3, 4, 5, 6 sessions. Now, it was just 5 green candles, but you really got to consider this like almost like a green day because we rallied well off of the low on that day. So we could have one more day in under our belts, or we could have maybe a little pullback tomorrow, and then we rally out Friday and continue that move into Monday, perhaps. And the reason being is that our end line game here is to get to our final target of 45.64 and see what's going on once we get up there. Maybe we'll push even higher, but I have the feeling this is where the exhaustion point will be. This would be the same amount of range that we moved from that July low to the eventual high where we kind of topped out, exhausted things, and then pulled back a little. So that would take us all the way to 45.64. And this move in July was very, very close in range, if not a little smaller, in fact, than this move that was made here in June and this move that was made here in May. So this is a good average point, and if we were to just do the same thing, we'd get all the way to 45.64. That's a real classic spot where we tend to kind of crap out is at the 60s, the 50s, the 60s, the 65s, that whole little center point of the 80 handle rule. That's where we usually end up crapping out on first try. So this makes a lot of sense. That's where I think we'll probably be going. But maybe we got to have a little resting on Thursday first so we gather enough steam to get all the way there. Or maybe we're going to rest Thursday and Friday and then on Monday digest everything that Powell said and change our minds and come on back on Monday, and then next week as we rally towards the non-farm payrolls report on Friday of next week, maybe that's how we're going to get to this 45.64. So just some food for thought. Hope this video helped you out and gave you a good start for tomorrow and Friday. As always, good luck and good trading.